Okay, so what's going on, everyone? Today I will show you a very easy way to identify supply and demand imbalances. So a demand zone is a historical area of price where institutional passive buy orders lay. In other words, demand is greater than supply. On the other hand, a supply zone is a historical area of price where institutional passive sell orders lay. So therefore, supply is greater than demand. So as you may notice, I emphasize the word passive. This is because these institutional orders are limit orders. Therefore, they add liquidity to the market and are waiting for aggressive, usually retail market orders to fill them. Now, how do we actually draw demand zones? So we look for two main candle formations. So the first one is the RBR, rally base rally. So we want to see a rather strong green candle followed by a relatively small red candle where the market is taking a breath, which is called a basing candle, and finally another solid green candle. Then, for the drop base rally, we want to see a solid bearish candle, a relatively small basic candle, and finally a strong green candle. So as you can see, we have a strong green, basing red, strong green, and for the DBD we have a strong red, basing red, pretty strong green. So now, the basing candle must absolutely be red, as we want to see the market take a small break from buyers before continuing higher. So a demand zone is therefore drawn from the open of the basic candle, as you can see here, to the absolute low of the basing candle. So here are some other examples of RBR and DBR. Now, how exactly do we draw supply zones? So supply is the exact opposite of demand. So for the drop-based drop formation, it refers to a green basing candle sitting in between two strong red candles. So you can see here a green, relatively medium-sized green candle sitting between two momentum bearish candles. Now, for the rally-based drop, we need a solid green candle, followed by a relatively medium-sized basing candle, and then finally a strong momentum red candle. So the basing candle must be green, as we want to see a temporary stop in aggressive initiating selling in the market. So as a consequence, we draw supply zones from the open of the green basing candle all the way to its stop. So as you can see here, from the open of the green basing to its stop. So here are some other examples of RBD and DBD. So as you can see, rally base drop and drop base drop. So these are the two supply zone formations. So now I have a few other basic information regarding supply demand. So these imbalance zones are invalidated once they are broken, as this means that all historical institutional orders have been used up. And if you're trading equity stocks, only chart supply and demand zones with after hours turned off. This is very important. Here are the time frames I personally use to chart these zones. Feel free to use whatever time frame you want. Thank you guys for watching. I hope this video was helpful. It was very basic, but if you guys want to, I can make a more in-depth video. If you have any questions, please ask me either in the comments or in the Discord link down below. And don't forget to subscribe.